Hello and welcome to Business Today. I am Siddharth Zarabi and with me today, LIC Chairman MR Kumar, the Chairman of India's largest IPO bound company. A month back you had a fantastic listing, 21,000 crore, Mr. Kumar. And since that month, we've seen the stock fall almost about 30%. Why has this been happening, and is this just related to the anchor lock-in ending, or is something else really happening, Mr. Kumar?
Basically, thank you for being on the show. And I think basically the markets themselves are very much down, and therefore that is also playing significantly in the minds of the people. The listing as such was very successful. And as the markets improve, I'm seeing a lot of growth happening on the stock, as well as people recognize, the size, the performance, the metrics that LIC has. I'm sure that the stock will bounce back.
Mr. Kumar, one of the things that strikes me is that you yourself, as the company, is one of the largest investors in the Indian market. And for years, your company, your colleagues have been working very closely with markets, understanding them, making investment choices, because after all, this is public money. And I know that your investment managers are some of the best in the business, very careful, very solid people. It must be quite a change to now have the focus of the markets on you instead of you being the guys who were taking calls.
Very true, Siddharth, and it's nice to be on the other side. Yes, we are understanding how the other side looks like. But then having said that, I think we have done well as far as contrarian investors go. One of the biggest contrarian investors, I would say, we are in the country. And the way we look at stocks for long-term buy and hold strategy is something that I strongly advise people to do the same with LIC stock. Stay invested, buy and hold is what I would advise you.
I also want to ask you about another facet that we have seen in the last 2-3 decades, which is how the markets treat a Sarkari company, so to say, using that for easier understanding post a listing. Without taking names, it's very clear that PSU stocks sometimes don't find favor with a certain kind of daily investor in the market, because many of the PSU stocks are long-term plays in terms of the businesses that they are in, let it be power, or we have in the past seen telecom also as one example. Do you sense that the same kind of perception is prevailing and LIC is not being judged or looked at by investors properly?
I think partly true maybe, because we never have looked at ourselves as a typical PSU kind of organization. We have been very competitive in the insurance space. We have close to 65% market share after 20 years of opening up of the market. That is quite a bit to say about a PSU company, a corporation. Having said that, I think investors who understand long-term business of insurance and the play that it offers in the long term, and as you have seen, we've had a lot of policyholders being first-time investors in stocks, also coming in and buying into the LIC. When you have 6.6 times subscription from policyholders, what more can you say about the trust that people have in the organization? So I think that this is something that is long-term, medium-term, long-term play. And we are here to ensure that we give our best to all our stakeholders, be it policyholders or shareholders.
Mr. Kumar, explain to policyholder kind of shareholders, the average shareholder, not the very sophisticated institutional shareholder, what is the significance of the anchor investor lock-in period ending, and has that in any way also has been a factor to add to the slightly negative sentiment around the stock?
I don't think the anchor investor has affected, rather the lock-in period has affected the stock at all. Basically, it is the entire the gamut of the stock market and what is happening to the stock market. Most of these stocks, financial stocks, were also down and up at the same time in the last few days. And going forward, I think things look a little dicey as of now. But as I said, once the markets improve and come back, the our stock will also bounce back. We did see a bounce back a couple of days back when the buying came in, and going forward also I see that happening.
A comment about the dividend payout. There has been some feedback about, there was an expectation of a higher than what was given dividend. Is that a fair assessment?
See, the dividend was decided by the board in taking into account all the, value that is there. And I think going forward, people should expect that we will be, as we have taken care of policyholders' bonuses in the past, year after year, we will certainly be taking care of the interests of the shareholders as well.
Let's get to hear from you about the broader insurance market prospects for the current year. And I'm talking about the current financial year. The first quarter is going to come to an end soon. Given all of that, how is the insurance business holding up, especially for your own segments?
So insurance market is doing very well. The entire insurance sector has been doing very well in the month of April and May. And the numbers have indicated 60 plus kind of growth rates in the entire industry. We are also keeping up with that pace in the first 2 months. June is also not so different. We are going to see a very good first quarter, I believe, and the entire industry will be seeing a good quarter. Maybe on the back of a smaller base, maybe last year after the post-COVID things happened. But nevertheless, the growth is good. India is a vastly underpenetrated market, as you know, and the penetration is more than a little over 3%. So there's a lot of work to be done in terms of ensuring the entire Indian public, both in terms of risk, both in terms of risk and returns, and giving them good quality products, annuities, etc. And I think there's a lot of scope for the entire insurance market to expand in the future.
Since we are talking about expansion and we know that there are several private sector companies also, I was noticing some commentary about this question which has been asked of you in the past, so I'm going to repeat that. The relative market share and whether you will continue to be as dominant as a player in market share terms 4 or 8 or 12 quarters down the line, given the significant competition the private sector is also giving.
Yes, like I said, I think if you compare to anywhere else in the globe, India is the only country where the public sector life insurance company has held on or managed to retain market share for such a long time. And therefore, I'm very confident that LIC as an organization will continue to hold on to 60 to 65% market share at least 2-3 years down the line as well, because as we have been listed, there is far more responsibility on us to take care of our shareholders. We are coming out with many new products. We are expanding the base of products. We are expanding businesses, be it digital, be it bank assurance. Therefore, I see that a lot more growth is going to happen in the coming months, and we will be able to keep up the market share.
Mr. Kumar, what would you tell those people who have had the opportunity to study the numbers, the financial and the operating metrics of LIC due to the listing document, and some of them say that the cost of doing business for LIC is very high because of a traditional model, branch-led model, higher sort of payouts to agents. Is that a concern, and is the board seized of this feedback that some people may have provided on this front?
So I think in terms of costs, I don't think we are costly in terms of even comparing with the private sector peers. There could be certain segments of business which are slightly more costly. As we grow, initially our non-par business, it could be a little more costly, banca business. But then overall, if you look at the expenses of management and expenses that go into the business and other metrics, I think we are doing a fairly good job.
What about the outlook on margins, sir?
You're talking about the VNB margins?
Yes.
So yes, on VNB, let me say that most insurance companies, when they got listed, started out at 8-9 kind of VNB margins. We are at 9.3 when we started off. and almost at 12 if you look at the pre-bifurcated fund. I believe that we should be able to quickly ramp it up to at least 15%. And I have said this earlier also that we will be faster than the private sector peers in getting to 22 to 25% VNB margins.
Mr. Kumar, how is insurance behavior changing? In my childhood, we were told that the first paycheck you get, go and book a LIC policy and for many years I thought it was just an investment play. When you are young, you don't think of insuring yourself because you are gung-ho and you don't believe anything can go wrong. Life teaches you different lessons. Has that insurance market changed, and particularly in the context of COVID and the bitter lessons that it has taught people to on the health front tragically?
Yes, I think COVID has certainly brought back into sharp focus the need for insurance as a primary, product, financial product. And I think what has changed over the years, Siddharth, is that today the millennials and the younger crowd are more comfortable, trying to take a term plan rather than a savings plan. Some others are more interested in a unit-linked policy, which gives them the added advantage of both risk cover and the ability to get equity-related returns. And therefore, going forward, we will have to be very nimble in terms of products when it comes to the younger population. We still have the elder population today who, as you and I thought of insurance 30, 40 years back, are now looking at annuities. When they're looking at regular payouts every month, which will be sustainable, which will be continuous, and which will be stable. So there are a host of things happening. Product diversification is happening very quickly in the insurance space, but I believe there is a lot more to come.
Mr. Kumar, is the increasing preference, and I don't know if you can share a percentage number perhaps for that shift, for term products linked to greater disposable income, and in the younger generation this propensity to spend today and not really bother about tomorrow?
You're right. I mean, younger population is not quite bothered about tomorrow, but I think they have come to grips with it thanks to the COVID again. But again, they would not like to spend too much on cover. They would probably put their money more in differential instruments, including cryptocurrency and the likes that we've been seeing over the last year or so. But then the preferences keep changing. And there is a set of even younger crowd which believes that saving at an early age is still important, and saving for the future is important. So it will be a combination of the kind of products that are available in the market, be it insurance, banking, or any other mutual fund kind of thing. A mixture of all this is what will be sustainable.
So if I was 20 years younger and I got the opportunity to ask you, what should I do, sir, with my paycheck, first paycheck or third paycheck, sixth paycheck, what would you advise a much younger me?
I would advise you to take a term plan straight away. In fact, the check that you're getting today must be 20 times more than what people are actually getting today. I mean less, 20 times less, 20 years or 30 years back. Out of that, substantial portion used to go into a savings kind of plan. So people used to hesitate a lot. Today with this check, a very small portion will get you, 50 lakh, 1 crore kind of a cover. So I would strongly advise you to take a term. And if you're interested in gains, get into a ULIP product.
Only purely for the debate, if I was younger and managed to turn the clock back, why would I need such higher coverage? Because one section of opinion says that the coverage has to go up as you age.
You're right. So the premium also goes up as you age. So if you're young and if you start off at what is called a level premium, to that sum assured, you continue to pay the same premium for the next 20 years. But if you're going to take that cover, the same cover, 10 years from now, it's going to cost you a lot more, number one. Number two, all said and done, mortality is there. We are all not going to stay here forever. So it makes sense to take a life insurance cover.
That's absolutely true, sir. Just one quick point on this subject before I move on to a couple of other questions. In terms of the realization for you as the insurer term obviously means much higher margins for you than any other kind of product.
Term has good margins, yes. Non-par products have good margins. ULIPs have good margins. But having said that, I think it is a question of the customer's preference, which is more important. Somebody who wants a par product, which gives him bonuses year after year, but they are not certain, he would like to take a chance with that. And somebody wants a non-par product where the returns are consistent, but may not go up if he wants to. So it is depending on what you want. But yes, you're right. The margins on term and non-par will be slightly better.
The reason I really ask this question, sir, is that if we sort of look at it in totality, there is inflation all around in our entire consumption basket, and including insurance prices have also inflated. If term is what you suggest, and I agree with your advice, then is there scope for you as the dominant insurer in the country to perhaps look at keeping term costs down or paring them as you go forward?
Yeah, that's a very good question, Siddharth. I mean, it again, concerns not only life insurance companies, but also concerns reinsurance companies, because most of the term covers will have to get reinsured at some levels. But having said that, I think for LIC, our retention limits are quite high, and our term premiums are one of the lowest in the sector. So yes, but when reinsurance companies are not prepared to bring down the cost, to that extent the term cover becomes costlier. But otherwise, it is the cheapest kind of life insurance you can get.
Sir, in terms of every 10 policies that you sell, can you provide a breakup for our viewers to understand as to how the insurance consumer is behaving in the country? Who is buying what, sir? What are the numbers, if you can just share some estimates?
At least I can't say for the industry as a whole, but for LIC, the term cover is still at very, very low, under 1 to 2%, I would say. The non-par would, on a AP premium basis, I'm talking about AP, would possibly around 7% of non-par, and the remaining 90 to 93% is par. So as I said, going forward, we hope to change the product mix to have more of non-par, to have a balanced view for both, the shareholders and the policyholders.
As I wind down this conversation, I ask you for your views on the broader macroeconomic situation, which also then feeds down into businesses like yours. We are seeing a higher interest rate scenario emerge, not just in India, but globally as well, the latest move being by the US Fed. Inflation is unprecedented. Americans, entire generation of Americans has never had this kind of inflation for food or fuel. They never believed that things could be costly. They didn't even understand the term. What is the macro environment shaping up over the next 3 to 6 months?
I believe that people are doing their best to contain inflation. Both the US and the RBI has also done its best. Going forward, that will be the main thing that you will have to control. But macroeconomic developments will again be shaped by what ultimately happens in the war, and what happens based on that outcome of the war, the prices of oil. So that is what is really driving this inflation forward. And let's hope and see that things pan out better for everyone in the globe.
My final question, as one of the biggest boys in the markets, and if stock prices are down and the outlook seems to be at least somewhere negative or at least depressed in the near term, what does it mean for LIC in terms of its own choice and picking up stakes in companies, given that valuations in certain counters may be perceived as very attractive?
You're very right. I mean, LIC has always been contrarian. So we will always buy in a falling market and sell in a rising market. So we are looking at these stocks, whichever look very attractive to us. I cannot name any stocks as being stock specific, but then over the entire basket of equity that is available, I think it's the right time to buy. So we are doing that.
Absolutely. I hope people hear you with the caution that if you're a retail investor, Please do a lot of research. When the LIC chairman says what he just said, it is on the basis of a massive engine of research, of institutional memory, and some of the finest people in the business who take calls on the stock market. Mr. Kumar, thank you very much for your time with us. I hope to have another conversation with you maybe a quarter down the line when the stock has recovered and the overall stock market sentiment is bullish once again. Thank you very much for your time with us today once again.
Thank you very much, Siddharth. All the best.
With that, it's a wrap on this exclusive interaction on Business Today with the LIC chairman. If you've been, thank you very much for watching.